What if I told you that you could own a tiny piece of Apple or Coca-Cola? Not as some billionaire, not even as an employee, but just by understanding one single, simple idea. Today, we're going to pull back the curtain and show you exactly how that works.
You know that feeling? You're holding your iPhone, and you just think, wow, I wish I could be a part of this. Or maybe you see a Coca-Cola truck drive by, and you just think about how massive that company is all over the world.
Well, here's the thing. You actually can. And the key to unlocking a piece of the world's biggest companies isn't some complicated secret formula. Nope, it all comes down to one little thing, a stock.
And that's really all it is. Seriously, a stock isn't some mystical financial jargon. It's just a share, a tiny slice of ownership in a real business. When you buy a stock, you literally become a part owner. To really get this, let's just forget about all the giant corporations for a second. Let's break it down with a super simple story that'll make this whole thing click.
Okay, so picture this. Your friend wants to open a pizza shop. They need $1,000, but they only have $900. You believe in their pizza, so you give them that last $100 they need. In return, they say, hey, thanks, you now own 10% of my pizza business. That little piece of paper they give you that proves you own 10%, that right there is your stock. And hey, if that pizza shop becomes a massive hit, your 10% slice is suddenly worth a whole lot more.
Okay, now hold on to that pizza shop idea, but let's scale it up. I mean, way, way up. Instead of your friend needing a few $100, you've got a massive company that needs millions or even billions of dollars to get to the next level. So this brings up a really good question. Why on earth would a huge, successful company want to sell off little pieces of itself to total strangers? Why would they want to share the pie at all? The answer, in one word, fuel. They sell stock to raise money, and that money is the rocket fuel for growth. They use that cash to do big things, like build new factories, research the next game-changing product, hire thousands of smart people, and expand their business across the entire planet. It's really the fastest way for a big company to get even bigger. And that moment, when a private company decides to do this for the very first time, well, it's a huge deal. It's called an IPO, which stands for Initial Public Offering. You can think of it like the company's big debutante ball on the stock market stage. You probably remember when Facebook had its IPO, right? For years, it was a totally private company. But then, on that one day, boom, the doors swung open. And suddenly anyone, from a Wall Street pro to you sitting on your couch, could buy a share and become an actual part owner of this social media giant. That's the real power of a public market. It gives everyone a chance to get in on the action. Okay, so we get what a stock is and why companies sell them. But here's the million-dollar question. Why does a stock that costs $100 today cost $105 tomorrow, or maybe $95 the next day? What makes the price of that little slice of the pie go all over the place? Believe it or not, this whole crazy, chaotic-looking stock market, it runs on one of the most basic rules in all of economics, the law of supply and demand. That's it. That's the engine that drives the whole thing. It works just like a seesaw. On one side, you have demand. Let's say a company announces some amazing new product. Suddenly, everybody wants a piece, right? More people are trying to buy than sell, so the price gets pushed up. But on the other side of the seesaw, you have supply. What if some bad news comes out and owners get nervous? Well, now you have way more people trying to sell than buy, and that pushes the price right back down. So that's the how it works, but what about the why? What are the actual events and, feelings that cause that big rush to buy or that sudden panic to sell? Well, it's a real mix of things. Sometimes it's totally logical, like a company releasing a great earnings report that shows they're making tons of money. Or it can be bad, like news about a major product flaw. But, and this is a big but, it can also be purely emotional. Widespread fear about the economy can make people sell everything, while a wave of excitement about some new technology can cause a buying frenzy.
So here's the really crucial thing to remember. The stock market isn't just a giant calculator running on facts and figures. It's a living, breathing thing driven by a combination of cold, hard data and the very human, often unpredictable emotions of millions of people all at once.
Okay, this is all great, but let's get to the important part, right? We know what a stock is, we know why its price moves. So how do you actually make money from owning these things? There are really only two main ways. The first one is the one everybody knows. You buy a stock at one price, and if the company does well and more people want it, you sell it later at a higher price. That difference is your profit. Simple. But there's a second way, dividends. This is kind of cool. This is when the company takes some of its profits and shares it directly with you, its owners, just for holding on to the stock.
A perfect example of this is a company like Coca-Cola. For decades, through good economic times and bad, they have consistently paid a chunk of their profits back to their shareholders. It's their way of rewarding people for their long-term belief in the business. You literally get paid without ever having to sell your share.
Now, with all this talk of prices going up and down and making money, it's really easy to see why some people think the stock market is just one giant casino. But there is a huge, fundamental difference in your mindset that separates real investing from just gambling. And honestly, if you're only looking at the short term, like the day-to-day or even minute-to-minute price swings, it absolutely can feel like a casino. It's totally unpredictable. But if you zoom out, if you take the long-term view, the whole picture changes. Over years and decades, the market tends to follow the real, actual growth of the businesses and the economy.
And that's the core logic of it all. With long-term investing, you're not just betting on a random number. You're buying ownership in real companies that make real things and provide real services. And as those businesses grow and become more successful over the years, the value of your ownership in them just naturally tends to grow right along with them.
So what's the simple truth at the end of the day? Forget the complicated charts. Forget the people yelling on TV. At its very core, the stock market is just a place. It's a marketplace to buy and sell ownership in businesses. The logic is simple. If the businesses you own do well, you do well with them.
And that's the key takeaway. It's the one thing to remember. The second you stop thinking about the market as some kind of magical, confusing force, and you start thinking about it for what it really is, ownership, everything changes. You stop being afraid of the ups and downs, and you start thinking like an owner. And that, right there, makes all the difference.